What's up, everybody? Michael Silva here to talk about the upcoming stock market collapse. Oh, the mayhem. Is the bear market rally coming to an end? Today's May 1st, 2020. Let's dive into the S&P 500 Technical Analysis update. We are looking at the SPX, which is the S&P 500 index. We're right now looking at the daily time frame. If you've seen yesterday's video, I started talking about a short position that I entered into. I also, if you don't follow me on Instagram, I posted this little video up notifying the people that do follow me, which is, 150 people, not much, but not a little amount. And I started talking about when exactly I entered into my position. Here, I'll play the clip. The May 15th puts for the SPY at 280. I just started scaling into that position about 15 minutes ago. And the reason why is because the volume on that options contract is going really high. And typically what I've noticed is when option volume starts leading a certain way, you can use that as an indicator to kind of determine where the price action might go. So place that, I'll see how it goes. If it goes up higher on me, cool. I'll scale in a little bit more, or I'll just get stopped out. Guess we'll see how the day goes. Bye. Yes. Feels good to exercise after placing some trades. Now, I didn't go too heavy in, like I said. I did 3 contracts on the 280 May 15th puts. All right. I am happy to say, at least at the moment, that I'm out of that position with a 60% gain. Woo, baby. That was quite a move. It was too hard to not take those profits. What does that result in as far as dollar-wise? That was about a $700 gain, just a little bit over it. And that concluded, actually, I was doing a small account challenge. I started with $1,500, just about there for the month of April, and ended up getting, here you go, I'll throw up the screenshot, over 220% gains. Now I'm going to be moving that back down to 500. I'm going to capture those profits and go buy myself a new pair of shoes. Hallelujah. All right, enough about me. Let's go ahead and hop into the S&P 500 Technical Analysis update of the SPX, S&P 500. All right, let me draw out the Fibonacci retracement level so we can kind of see what is going on with that. Now, as we pointed out a couple videos ago, it was testing the 61% level, and then it got kind of rejected. And then yesterday's trading day, that's when I was talking about the short position that I got into. And then we saw the big gap down today and some very bearish momentum. It did not reach down to the 50% retracement level, but that's what we're going to talk about. We're going to see who's in control here. Are the bears or the bulls still in control, or is it still somewhat undecided? Well, in order to do that, we have to look at the ideals in each one's favor. So let's start with the bears first. Okay, so as you can see, this trend line, this nice blue trend line that's kind of diagonal going up, it has been broken. Okay, so that is a bearish sign. One for the bears, right? And then if you remember the previous videos, I was drawing out a channel, and this blue line that's horizontal was the upper part of that channel. Now this is very important here. This candle came down and broke through it and closed below that channel, or below that support, which is now resistance. And that's what makes this important, is because if today were to happen and it came down and moved down here just like it did, but then it closed above this range or this support level and still remained to be support, very similarly to this, how I said this gap and trap was this was a bearish move, but yet we still saw the up. This would be considered like a rope-a-dope. You're roping some dopes in because they think that the price, just because it says it went lower, but yet it would technically be a reversal candle and right at a very good area of support. So it would actually look good for the bulls in that case, but it didn't do that. It closed below it, so now it is again resistance, and it's a strong resistance because, as you can see here, it tested it, moved down, broke through, and then here, and then you have a big point of contact over here on this big pullback, and it bounced from it. And then same down here, try to get above it, but it didn't. So this is a very defined area. 280.53 or 28.53 is now back to resistance. So that's another one for the bears. Another one that we kind of see, it's not fully crossed over yet, but the MACD, once again, I don't know how long or how many days this is going to be, but it does look like it's going to be curling over here somewhat in the near future. I mean, we can't determine what news is going to come out that could push this thing even further, but it's right by the zero. It looks like it's about to curl over. We know as traders, this can last a very long time. But I do think that we're going to start seeing this move downwards. Now, what is going on in the bulls' favor on the daily time frame? Well, the bulls still have a lot of support. Okay, they have a lot of support right below. I'm gonna move this, I'll just create a new one. So the bulls, like I said, still have a lot of support. This was the initial channel that I drew out. So this would be that support line. Let me make it green just so we can see it as a support line. But it doesn't really stop there. We also have more support here. Looks like it's pretty clearly defined in this range. And we had the 50-day right here. Not to mention we have the 50% retracement level. So there's I would just say there's a zone of support, which is going to be very hard for the bears to break below. That's good for the bulls because the bears are going to they're going to struggle to break that. So how am I going to really determine, or how can you determine whether or not there actually is the end of this bear market rally, that a massive stock market crash will be on its way to maybe test the lows? Well, I would say if you can, let's come back here and start showing you what kind of happened on this channel up. Is it came up, it pulled back, it came up, it pulled back, it came up, and now is this just pulling back to maybe make another high? It's very possible. But notice how each of these lows were higher. So what would indicate to me that if this channel, or to maybe see a change in direction, I would have to see this area be broken, because this was the last pullback, okay? And it's a very clear area of support. It was actually what we were talking about in previous videos, all this channel. So I would have to see the price action come down and not just stop here or form some sort of, wolf candle and bounce back up. I would need to see it break through and close below it. That would show to me that this isn't just some sort of, double or triple bottom out, whatever kind of pattern you would want to call that. But that would be a pretty bearish sign to have the price break below and start moving farther to the downside, because then this area, which is also a clearly defined level of support, would then convert to resistance. So the bulls, they got a big zone of support. That's pretty much what's going on for them at the moment. It's going to be hard for the bears to take it out, but they just might. So that is kind of the daily recap. I don't need to dig into it much deeper than that. For the bulls, got a lot of support still. Has to really break through this level to really give me some good confirmation. And we still got to see more momentum to the downside. I'd like to see this MACD cross over. This area right here is where my eyes are going to be, because this could just be a pullback to another high to retest, or to test this area up in the 3,000 range. So let's go ahead and zoom out a little bit though and look on the weekly time frame to see if it gives us any indication of, hey, no, we might see this bigger pullback for sure. So this 2700, 2729 level, I got to kind of keep that in the back of our minds when we go to the weekly time frame, which we'll do right now. Okay, so here is the weekly time frame without that trend line going up, because we kind of already identified that. This right here to me is bearish, and the reason why is because it was kind of created this bull flag here, right, from the beginning of, or the mid-March, and it moved up and then started consolidating, going sideways. And this candle, this week, right, this week just closed off, so this is the end of this candle, is a reversal candle. It's an inverted hammer. That defines, that could be the wolf in sheep's clothing. Like, we had the Fed step in, we had a lot of other people go, yes, buy the stock market because the stock market's on sale, and it started pushing and pushing and pushing, and then all of a sudden the wolf came out, and it's reaching up to this 50 period moving average, just right around in that range. The wolf came out and are saying, hey, it's time to go short, or I'm selling into this rip. I want to take my profits now because I think something's brewing, is basically what this candle is telling me. And like I said, it closed below that channel. It would look a lot different to me if it closed above that support, or this now resistance level. So this on the weekly time frame is looking bearish. On the MACD, it's a negative divergence. You have price action going up, but then you have, so let me draw this out. This is good to point out. So you see price action moving up, and you see MACD going down. That is a negative divergence. And typically what you see happen is the price action then resolves to meet up, not necessarily all the time, but it reverts to the mean. So, and what we're seeing here on that wolf candle is a clear identification that, hey, we might now start seeing that pullback because of this negative divergence. So something to point out on the weekly time frame. Personally, I would not be going long at this point. Even, I mean, who knows what's going to happen on Monday or what kind of news is going to come out from. But from a technical perspective, I just would not touch this with a 10-foot pole going long. I just wouldn't do it. Even at the moment right now, I'm hesitant to go short because I just made a good move on it. So I'm gonna wait for another clear indication, you know, on something. Maybe I'll be looking at other stocks individually. I always do. Yeah, you know, you got to use the SPY and the SPX as an indicator, potentially a leading indicator as to where you might see other stocks going. And if this is any sign, we can see a bearish week next week just because of this negative divergence and this wolf candle, and we might have some bad news come out. Now, speaking of news, at the close, almost just right before the close of today, it's like, what a coincidence, right? Donald Trump comes out and says something that the FDA has proved the process, or to speed up the time frame on getting remdesivir, the Gilead drug, out to the public faster. Something like that on those terms. You have to search the article. But he did say that right before the market closed. I saw it pop up on Bloomberg and CNBC. It was a developing story. So there's some news coming out, maybe because they're looking and they're like, okay, well, we need to do something quick to make sure that this market doesn't pull back, or, you know, to give people hope and confidence still in the economy. Who knows? That's all speculation. But what I can tell you is this looks bearish. All right, one last piece. I want to zoom in on the intraday on the hour time frame. This to me is also another kind of bearish sign. As you can see, we had these pullback for these last couple of days. This was today's trading day. We had that gap down, and we basically moved down for 3 straight hours, and then 4 straight hours we went pretty much sideways. Now, this is the top of the channel. I'm going to go ahead and say, hey, just ignore that. If you really want to remember where that's at, I can show you that basically it was at the top of this, or the bottom of this candle right here. If you want to keep an eye on it, that's fine. But this is actually one of my favorite type of trades, okay? I call this, well, I don't call it, I learned that this was called the cliff formation. And you have basically this, you know, kind of big pull back down. We'll just basically call it from here because it was that day. And then you have it trail sideways. Now, if in market open, if we open above this blue line, that would be a good sign for a good short opportunity. Now, that's not necessarily that we will, but now hear me out. This is why I say this is a good opportunity to short if it opens up above this blue line. Because when stocks trade sideways after and in that bearish context, if it breaks, and when it breaks, what you can see is a flush to the downside. And the more it trails sideways and consolidates, typically the more aggressive those moves are. So you can see just this big move, probably I would say down to this range right here where you see in the back of the chart there, some previous area at 29.73. But imagine 27.93 to where it's at 28.22. That's a pretty sizable move in one candle, in 1 hour. So it's something to keep an eye on. I like this kind of setup. Doesn't mean that you necessarily have to, but yeah, I do. This candle, yeah, it's that hammer candle, so that is technically a reversal candle, but it happened with other candles in this range, so I'm not holding up too much weight on that. As far as where it can go down to, I would say, I mean,
maybe a gap close into this range would be a good target. So yeah, I would say right here, 27.61. So we might see it pull back if it does break to 27.61 to this range. But it doesn't necessarily mean it's going to happen in just one candle, but it could happen over the course of many. So the 1 hour time frame looks pretty bearish. Yeah, so let's go ahead and hop back over to the daily, and I'll kind of just tie this all together. Okay, so we're back here at the daily. We kind of went over some ideals that were in the bulls' favor, really just a lot of support in this area, and then we started going over the bears' ideals. It does look like there's some more ideals in the bears' favor than there is the bulls'. However, we're living in a world where a news article can come out or Donald Trump could tweet something and it could really escalate the markets. Even the Fed could step in and just say something random that really pushes things to a certain direction. So from a technical standpoint, I would like to see it break the low of this candle and close above it. That's where this green line is, 2,700. I would like to see that take place for me to gain confidence that this little whole, up, pull back, up, pull back, up, pull back is done. Now what I would personally also really like to see to re-enter into another short position is for it to come up here and enter into that 3,000 range. By no means am I going to be entering in long at this point because there's no confirmation to me saying that we're going to see an upwards move yet. So I don't want to gamble by going long at this point in time. I'm either going to wait for it to come up here to re-enter into a short, wait for some sort of crazy hammer candle on high volume to say that it's going to be bouncing up, or I'm going to wait for a short to break through this 27.29 level. That's what my eyes are on. That's what I have for you today, and that's where I'm going to end it. Bada bing, bada boom, not too shabby. That is the S&P 500 technical analysis update to close off the week. Everybody have a great weekend. I hope your trading week went well. Hasta la vista, baby.